All right, team. Hey, thanks for hanging in there with us for the mortgage rate saga of 2021 after a crazy year in 2020, obviously. And we have some good news today. So this is actually legitimately good news. I want to show you kind of where things are at, how things look. Should have probably closed the window for audio purposes. But at the end of the day, I'm just a one-man show here who is just trying to get you some information. So we did see a correlation with oil today. So I'm going to show you that. This could be it. We may have figured it out. What is spooking the markets very well could be oil. We'll show you the correlation. Today's the first opportunity to see a correlation, and we saw one. So it doesn't mean much, just one for one. We need more like an 8 or 9 out of 10 to really feel good about that correlation, but we've got the beginnings of a correlation. Feel free to drop a comment too, by the way, here, or ask a question or do whatever there. Obviously, I'm a VA home loan specialist, NMLS 155010, and help veterans buy and refinance homes. Now, let's first take a look. We're going to go right away to mortgage bond chart. Now, what's really great about today is that we're up over 100 basis points. So today we got the day that we've been hoping to see for so long. Remember yesterday, right here, this guy, the huge gap down. I mean, we closed the previous day up here, and we gapped down and then closed way down here. So that was a really, really bad day yesterday. I didn't know what to say. I was at a loss for words. It was not good. The overall trend, though, if we look here, we're just going to take today, we're going to kind of do a macro pullback. So 104 is the price. All right, that was kind of the high. So we went from 104 to our lowest point here, which was yesterday at 99.50. So 99.50, that was our low point. So this delta here is basically 450 basis points. Okay, that's how much ground we've lost from the lows, right? And remember, when these bond prices go down, that means interest rates go up. Okay, so we want these prices to go higher, not lower like they have been. So we've lost at one point yesterday, at the worst point, 450 basis points, which is an enormous amount. Another way to say that is 4.5%. Now, it's not 4.5% on the rate, and that's the reason why I don't say it that way. But that's a very large amount of loss on these bonds. Now, the good news was today, look at this big green guy right here. Look at this freaking Shrek. Thank you, Lord, for this guy right here. That is big, big news. At a great, perfect time. Man, did we ever need it. We got our Shrek when we needed him right here. One man production is struggling for a second. Oh, that's awesome. How about that instead? Yeah, let's do that. That's what I wanted to do. So we've got this really good looking candle today, which took us up over 100 basis points. This is terrific news. So if you look from the actual lows here yesterday, which we picked up about 50 basis points from that before the close, and then another 100 and change today, we're about 160 basis points of that 450 that we lost. We've gotten back. So we're down 450. Now we're really down 290. We're still about 300 basis points from the top, but we made a big chunk of it back today. And most importantly, you know what? See if I can use this tool. Will the magnifier work on this? Yeah, most importantly, see right here, those two red lines? We busted through those two levels of resistance. So this candle right here just busted through there. Actually made a few more gains before it settled down closing, but most importantly, it closed above these two levels of resistance. Now, this may not be great news, and the reason why I'm hesitant to say great news about this is that, well, what happens from here? This is a clear resistance level, and it's totally likely, if this were a downtrend, you can see the downtrend line is like right here, that we would just roll over and continue to get eaten up by these resistance levels on Monday. I hope that's not the case, but let's take a look at the correlation. Remember, we were trying to figure out, okay, what is it that is causing all of this? Why have mortgage rates been obliterated? Who's the culprit? How do we track when this is going to turn around? Because everyone's asking me, of course, like, hey, do you think it's going to turn around? And I do. And one thing I want to make clear, and I did the research on this, and I knew in the back of my head, so I went back and looked at it. I better check my one-man production here. Yeah, I've had a feeling I was screwing something up. So let's do this. Here we go. So the last 3 times that we've seen interest rates spike in a short window, and I used a window of 2 to 3 weeks, all 3 times within 3 to 5 weeks from then, rates recovered almost entirely. Not entirely each time, but almost entirely. So all 3 of the last times, and this is going back to 2014, all 3 of those times that this happened, we've recovered. So that's why this morning I woke up and said, you know what, I wonder if today's the day to buy bonds. I was actually going to buy bonds today, not for the yield, but for the trade. And I was a day late. Should have done it yesterday, because you could have made a ton of money buying bonds with not a whole lot of risk and some guaranteed yield, and got some appreciation. So I missed that trade. But here's oil. So oil was what today? Down. Oil finally takes a breather. Now, remember, we're looking at oil here because this is the one thing that is essentially a tax on everything that could spook an economy. It would make sense if, investors and companies were spooked by oil prices going, you can see right here from the day of the election, and it's actually more than 50%. It's almost 60% that prices have gone up just in a short few months. That's pretty scary, okay, because this affects the cost of everything, the cost to ship goods, food, every consumer who drives a car, all these costs. It's just a tax. Everything's going to cost more. Great for the oil companies and investors in the oil companies, but not good for the average everyday person, okay, because it makes everything, or the average everyday business for that matter. So you see this correlation here. Now, so we have oil down, okay, also the Dow Jones down. Normally we correlate bonds with the stock market. There doesn't seem to be that correlation there, so we're trying to figure out where it's coming from. It very well may be oil. So today oil's down almost 3%, and we get a rally in the bond market. Could that be it? Is this it? Is this what we need to watch now? Is oil, to see if we're going to have massive inflation and a huge tax on everything that causes problems in the economy eventually? That is the question. So I just wanted to make note that that was the case. But here's the good news. Based on today, and let's just get out of this for a second. Based on today, I'm almost finished decorating in here, as you can see, trying to get some stuff put together. We have a nice little recovery that took place today. We're heading into the weekend, so things can change quickly. You never know what's going to happen. We did bomb Syria yesterday, apparently. I don't have a ton of information on that, but I was also thinking maybe there's an underlying war thing going on, or an national situation happening that we don't know about. So that could be part of it. But if it's oil, we got a little breather today that shows us, okay, we can track this correlation now so we can see what's going to happen. I am optimistic that this will be a four-peat and that we will see rates improve. It may take 3, 4, 5 weeks for that to happen, but I do think that we will see that. So for those of you who think you missed the window on refinancing, get yourself in position to lock and be ready to go so that you can lock on a really good day. I've got a bunch of people who are lined up and ready for that. If you are purchasing, you're just getting into contract, I think it might make sense to float here for a second and just kind of see how this goes the next few business days. Are we going to retreat back from that number? Remember, this is either just a confirmation of the downtrend. We can't really see, this, even though we broke through these important resistance levels here, we can't really see yet ultimately if this is just going to be a continuation of this downtrend. Or if this is going to be a breakout in a reversal in the other direction. I do think it's a reversal, and I'll tell you why. And I'm going to get a little bit technical here for a second, but I know we have some technical guys who watch this. And by the way, I have absolutely no intention of spreading any fear or doing any fear mongering or being a drama. Someone called me a drama queen. This isn't drama. This is real life, people. And there's a lot of people who make their living based on this information. So I'm just trying to help everybody out. All right, so I think right here, so you can see this was a support level a while back, became, it is now a resistance level because we're underneath it. But this line right here is where I think we'll get. So I'm going to call 102.50. So mark your calendars on that one. I think that we will eventually, even if we do peel back here, I do think we're going to get here. Why? Because we have a gap down. You can see in all of this trading, and you can go back and look at all sorts of different things here. Very rarely is there a gap that does not get filled. Very, very rarely. Well, we have a gap here, okay? We had a gap here, this gap got filled today. This gap is still unfilled, and I think that it will be filled. And I think that that's probably where we're headed. So that's 150 basis points higher than where we are right now. So if that's the case, then maybe we can see oil take a little bit of a breather. Okay, it helps us get there if oil is the correlate, which we think it is at this point. And that helps us get there, and that gives us a good lock opportunity maybe in the next 1 or 2 weeks. And then we'll just see how things can sustain from there. The Fed is adamant that there is no inflation concerns. Doesn't make a lot of sense. I am looking to talk to someone about Bitcoin and kind of hash that out. I have a lot of things that I think about that, and I want to take someone who really knows more than me and challenge them on it. So look for that video to come out soon. But for now, you can go into the weekend with some good news. Goodness gracious, Derrick. I'm sorry, I wasn't sharing my screen. That was terrible. So anyhow, the thing I've been talking about for the last few minutes, it's this. So I think we're going to get to 102.50 right here. This is what I was talking about. And the reason why I think that is because this gap right here has not been filled. So we filled this gap right here today. Okay, that got filled in. This one is still open. And I believe that we will get there. So that's 150 basis points, I think, to the upside on the reward side, if we're right. And so we'll see if we can get there or not. But I just wanted to give you the good news. I know there's been some bad news this week. I know I'm the messenger who tends to get shot when that happens. But at the end of the day, we do have good news today. A big, big day for mortgage bonds. Over 100 basis points gained back out of the 450 that we've lost. So I would call that a win. And a great way to head into the weekend after 2 terrible weeks of just getting pummeled. So sorry for my production mishaps. I do have a lot going on, busy day. I got to get back to the phones, but wanted to let you know what was going on and keep you abreast of the situation. Monday is going to be a huge day to tell us whether or not we're going to break this downtrend and move to an uptrend where I believe we're going to hit 102.50, or whether we're going to continue this downtrend. And we all need to really look at locking. That very well could be the case on Monday. We'll see. So everybody have a great weekend, and I will see you soon.